This is episode 1128.
From my vantage point, I'm yet to come across an AI tool or product that is able to forecast with a higher degree of accuracy than, candidly, even our finance team is able to forecast with more rudimentary approaches. Where I'm seeing AI be incredibly helpful on is obviously the speed of which you can understand your historical results, the depth of which you can drill into those results and understand, either correlation or causation that may exist over large swaths of data, of which, obviously Brex has a large amount of by virtue of us being our own payments infrastructure platform. That being said, when I think about being able to extrapolate, past 90 days, I think that's where I see the AI sort of degradation of fidelity as it relates to forecasting accuracy, because there are just dynamics that I don't think the models are able to sort of understand and ingest as it relates to, well, what is your actual business strategy? How are you thinking about the ramping of sales reps or the deployment of marketing dollars, or especially as you move into new markets and new sort of growth verticals, such as maybe this EU or UK expansion, or some of these partnerships that only existed for the last 12 months, an AI model just really would struggle because there's just not enough historical data in which to rely upon. And when companies are growing as fast as Brex are, adding new products, adding new markets, there's just a less of a 10 plus year look back that those AI models can use to then sort of prophesize the future. Whereas I think with just humans in the loop, I think you have a bit more of an intuition around some of these things that will enable you to get a more accurate forecast.
What happens when the CFO's job description keeps expanding beyond finance, beyond operations, all the way to running the business itself? That's where today's conversation takes us. Brex has become known for rewriting the playbook in corporate spend. But what caught our attention was how its finance leader seems intent on rewriting the playbook for the CFO role itself. Stay with us. Our talk with Brex President and CFO Ben Gammell begins after this.
Why are finance teams struggling right now? It's not a lack of skill. It's a lack of time. Even the most talented finance pro has twice as much work as they can handle, if not more. Automation with AI is critical just to survive, let alone reach peak performance. But you don't want just any AI solution. You want one built with finance users in mind. This is where Planful comes in. It's a platform that transforms how you plan, budget, forecast, and more. And with Planful AI, you can transform how you work without sacrificing control. Use Planful AI to streamline workflows, detect anomalies, plan with precision, and get more done. Everything Planful AI assists you with is fully auditable and secure, so you can reduce your manual work and stay proactive, agile, and confident in every decision. Your finance team deserves to be elevated above the repetitive tasks. The best part is, you can get started right away. See Planful AI in action and start elevating your team today.
Hello, CFO Ben Gammell is with us. Ben's career journey is anything but ordinary, from cutting his teeth in investment banking at Goldman Sachs in Sydney, through leadership roles in operations, business development, as chief of staff, to now serving as both CFO and president of Brex. He has overseen more than just financials along the way. Systems, data, legal, global expansion, and product strategy are under his umbrella. Today, with Brex expanding into Europe and strengthening its finance function in preparation for a potential public listing, his priorities should be easy to expose, or, well, we'll see about that. Hey, Ben, welcome.
Great to be here. Thanks so much for having me, Jack.
So we always begin in the same spot, pointing the direction backward, really. Hey, go back in time and try to, here are the experiences that really influenced my path to the CFO office. What would those be for you?
Sure. So, I started my career, as many CFOs do, in investment banking. So I was at Goldman Sachs in the investment banking team in Sydney, Australia. And as part of that, I oversaw TMT clients and essentially helped them with equity, debt, processes, any M&A, any sort of strategic advisorship, essentially. And I think what that really helped me with is get an understanding of the foundation of finance in a more practical setting. I mean, I studied business and as an undergrad alongside engineering, but I think it was really when I went to Goldman and saw how finance was sort of put to play in a real application setting that gave me this sort of understanding and appreciation for finance in terms of its real world applications. That being said, I was at Goldman. I wanted to get closer to how actual business operate and really understand the business more deeply. I think banking gives you an amazing breadth and exposure to a bunch of clients, but you probably don't understand any one individual company all that well. And so I really wanted to get that more firsthand experience. And so decided to leave Goldman and moved to the US to take up a role at SoFi, which is the consumer loan lending business, and where I ran their mortgage product for a number of years. And so I think I moved from the sort of traditional finance role into more of a core operating role, which made me sort of get much closer to how do salespeople work, how do operations people work, and how does the sort of, the sausage be made within a company that obviously the finance teams then subsequently report on. So really enjoyed my couple of years stint at SoFi, and then parlayed that into my now sort of 7+ year time at Brex, which, as you mentioned, I've held a number of roles across operations, the chief of staff stint, doing business development, marketing, even running our people team. And then for the last 3 years, I've been leading the finance and accounting function as CFO, as well as legal, business development, data systems. And then more recently, as of this year, have expanded my role and remit into being the president of the company, which essentially means taking on sales, marketing, and operations in excess of that. So the way that my role is shaped has really been almost like continual tours of duty throughout a number of parts of the Brex organization, which hopefully then sets up the company and hopefully me for success in this new role with regards to the overall finance impact on the business.
Has it always been, even from your days back in Sydney at Goldman Sachs, was it tech? Was that was that your industry? Could you have been swayed somewhere, some other industry?
Yeah, I think I've always had a deep fascination for technology just by virtue of the unlock that can represent for businesses and being able to do things in a new and more efficient and effective way. I mean, in my undergraduate degree, I studied mechatronic engineering, and all of that sort of premise is really around robotics and systems automation. And so it's really with that view that I gravitated towards more of the tech clients within Goldman, and we had a really strong TMT practice in Australia. And I think was also the thing that I recognized was, as you think about career development, I would say tech companies are very on the front foot around how do we do things in a new and interesting way? How do we think about things from a first principles perspective? And I think for young individuals, that presents like a really interesting career opportunity and pathway, because you maybe aren't saddled with as much of the expectation that you have decades of experience in a given subject matter or domain, because almost if the entire company is doing something for like in a novel way or for the first time, experience, while still valuable, probably is sort of equally weighted with, ambition, capacity, and first principle thinking.
It seems like just looking at the different roles that you've had, that you're pretty, it wasn't just about finance for you, obviously operations, but I mean, did you think you would someday become a CFO, or not necessarily? It was really the operations that brought you, the opportunities that brought you forward.
Yeah, I sort of have had somewhat of an unconventional pathway to being a CFO in terms of, to your point, I didn't come up through the traditional finance org of a company, and I sort of really moved around within both SoFi and Brex to sort of lead me to the role that I'm in today. So to answer your question candidly, CFO wasn't something that I necessarily had, core aspirations of being at a company one day, but was something that I was obviously afforded the opportunity at Brex, and I'm obviously very grateful for that. And the reason why that's the case is what I've historically anchored my career on and my career decisions on is where can I have the most impact and where can I help the business out in the greatest way possible. And so I think that was initially, for Brex in the course of operations. I think it subsequently became being a sort of proxy to Pedro and Enrique, the two co-founders and co-CEOs at the time, whereby I was almost a fixer that would go into different parts of the organization that needed a bit of attention and a bit of love. Did that for a couple of tours of duty. And then when the predecessor of mine, the prior CFO of Brex, left the company, that obviously created an opening and opportunity for me to step into this role. And I think just with my background in finance, hopefully was one that I and the business were well set up for success to take on. But I really more thought about how do I have the greatest impact and hopefully help on the business, and whether that's finance or otherwise, I'm sort of happy to dig in and do it.
You have certainly had what I would call an accelerated path, made an accelerated path to the CFO office, and now the office of the president there at Brex. We have to ask you though, and I'd be interested what comes to mind. Can you share a time in your career where there was a failure or a type of setback, unexpected maybe, taught you something, something that you still rely on today, that past experience that, was a pain at the time, but paid it forward somehow?
For sure, yeah. So I think, I would say a lot of my career to date, whilst maybe on LinkedIn paper, so to speak, it looks sort of up and to the right. I think there have definitely been moments where there have been setbacks. I think some of those setbacks have been, say, for example, when I was running operations, we were trying to take a novel approach to how we thought about underwriting e-commerce companies and provide them with extended float. That product and its designation, which I was a big part of, I think honestly ran into some challenges by virtue of the product we wanted to offer relative to the customer needs. Brex just was not well equipped to offer that product. And I think we at Brex, and myself definitely, should have had that humility to understand that there was essentially a gap between the product we wanted to offer and ultimately what the customer needed and what they were optimizing for. And so, I think that was, a product that we sort of attempted to, and then realized that because we're a fintech and we're not necessarily a bank and lending is not our sort of core competency, that wasn't really an avenue that we should have proceeded with. And so what that really taught me at the time, and then sort of taking this into my finance career as well, is being really thoughtful and intentional about what are the problems you are trying to solve for as a company. How do you believe you are best positioned to solve those for your customer? And then making sure that those things really closely aligned. I think when you have companies that are, successful, such as Brex, you could create this abundance mindset where you can believe you can go after anything and you can solve any problem and you can serve any customer. And whilst it's a very helpful mindset to have, I think it probably errs on the side of hubris, where you may realize that there are certain things that actually Brex isn't best positioned to go do, and we shouldn't go and spend the time, energy, resources in pursuing that, because at best we'll create a sort of middle in performance product for a customer and not quite fill their needs, and at worst will obviously distract from the core competencies of the business and how we should operate going forward.
So it's interesting. You arrived at Brex in 2018. So you have made a 7.5-year investment here. Clearly, it's paid off. You've found opportunities along the way, but the company has also made some major growth changes as it's grown to new plateaus. And according to the business press, Brex has gone through a number of different versions, Brex 2.0, 3.0. From your perspective, and having been there, how have your duties and priorities maybe shifted during these internal pivots that might have been made?
Yeah, I think that a lot of those internal pivots that we've made, to use your words, has been really anchored around how do we continue to focus and be sort of ensuring, to my earlier point, that we are focused on solving a core problem that a customer has and that we feel uniquely positioned to serve. And I would say, like, where we have made some missteps in the past was, again, thinking that we could be everything to everyone and not being very focused and disciplined about what are the products we're releasing and to whom and how are we selling them. And I think my role in general, I would say, has been, I think, largely speaking, a fix-it role, so to speak. And so a lot of the chief of staff tour of duties that I went through was trying to help out parts of the organization that maybe weren't scaling or keeping up with the rest of the scale and progress of the company. And then I think even though my move into finance wasn't because of there necessarily being an inherent challenge within the finance team specifically, I think that move came at an interesting time because I moved into the CFO role in the end of 2022, which, as you will obviously recognize, was a vastly different environment than, say, 2021 or 2020, especially around interest rates. And I think that move came about at a time where we as a company needed to go through a pretty meaningful shift in terms of our mindset around capital. I think up until that point, we had thought about the fact that, capital was almost free. If we wanted to sort of continue to invest aggressively, we could always just raise future rounds of capital. I think at the time that I was put into the CFO role, it coincided with a time that we as a company more broadly had to have a cultural shift around actually capital is finite. We need to be much more strategic and intentional about how do we deploy that capital and really be focused in our pursuits of that. And what I appreciate about my prior experience before being put into this somewhat daunting task of moving from a high cash burning company to one that is cash flow positive was hopefully my tours of duty in other parts of the organization gave me a better appreciation and candidly empathy for the priorities of different parts of the team, so that when I went and had a conversation with the sales leader or the marketing leader or the people leader or whomever, and talking about how do we think about capital allocation, how do we think about reining in ultimately the amount that we were spending, I was hopefully able to do so in a way that just wasn't like, hey, there's this number, you have to hit it. It was a much more hopefully collaborative and constructive conversation, because I've been on their side of thinking about what they're trying to optimize for and what they're trying to set up their part of the company for success.
So tell us about Brex today. I mean, what sets it apart today? And we know it's very well known in this space, corporate spend platform, but what sets it apart?
Yeah, so I think there are three things that fundamentally differentiate us when I think about just the market we operate in, which is obviously, fortunately, a very large market. I think the first one is the proprietary global infrastructure payments that we've built. So back in 2018, Brex made the decision to build our own payments infrastructure stack and not rely on, say, a Stripe or a Marqeta as middleware between us and the network. And one of the things that, at the time, that was a decision born out of necessity, because I would say the relative maturity of those organizations and their issuing card products wasn't what it is today. It has actually begetted us the ability to have greater control and sort of fluency or fluidity in terms of the product offering we're able to give customers in terms of our global support. So, for example, with Brex, because we actually built this direct integration with MasterCard, you can issue, say, global corporate cards that work in over 50 plus local currencies, which is something you can't replicate if you're a fintech that relies on, say, Stripe or Marqeta, because you're then ultimately constrained by their offerings, which is in the single number digits of currencies, for example. I would say the second area is we've really thought about our expense management software and the AI nativeness of it as being almost like a trickle-down approach, whereby let's go out and build for the most complicated and most sophisticated businesses in the world, such as Arm, Anthropic, and the like, and make sure that our expense management really holds muster against the likes of a Concur, especially to complement that global offering. And then all of that investment will trickle down into being a better and more easy to use expense management software for companies that are maybe of a smaller size and scale, but ultimately have aspirations of being, the next DoorDashes of the world or the next Coinbases of the world, for example. And then lastly, I think it's in part because of how we've built our payments infrastructure stack. We have the ability of creating a really unique and differentiated partnership ecosystem. Because we built all of the payments processing capabilities internally, we're able to go and partner with who we think of as best of breed software players in adjacent software sort of domains. So, for example, we have a partnership with Navan on the travel side of the house. We have a more recently launched partnership with Zip and Cooper on the procurement side. Because when you think about serving these really large global multinational companies, their needs and complexities are such that they ultimately want to work with these software stacks that can use and better serve their needs. But as long as Brex as a card and a payments company is powering all of that, we still, ultimately can provide a great solution. And I think a lot of that thinking has evolved again back from our, say, 2021 heyday, whereby we actually recognize that it's a really intentional and thoughtful thing to think about as it relates to when do you build, when do you buy, when do you partner? And I think we've been much more intentional about where do we think Brex has unique core competitive advantages, and let's make sure we continue to invest and bring that to our customer. And then when that creates opportunities to otherwise partner with best of class software, we'll take that on.
Got it. So Brex is expanding in Europe. We read headlines last month, actually.
Yeah.
And the question is, how are you going to balance these obvious growth ambitions in new markets with the need to build profitability and let's call it investor confidence at home, which has got to become a large focus, of course. What would you tell us?
Yeah, so I think, our initial foray into, say, the UK and EU markets is really centered around how do we continue to better serve our predominantly US-based companies better by virtue of having, again, that own proprietary infrastructure and payments processing capabilities in those foreign markets, because we think of that as really core to our offering. And so the initial kind of, I would say, dipping the toe in the water will be more about serving our US-based multinational companies that have operations in those markets. I think obviously the phase two is how do we then think about serving, entirely foreign and wholly foreign companies on the Brex platform, because we have the technological capabilities to do so. I think the balancing act, though, you're alluding to is very true, because if you think about just in terms of market size, the US market is still the largest market by a country mile when it comes to global corporate card spending. And so we want to make sure, again, with respect to focus, that we continue to be intentional about the US market is still our primary objective, our primary growth avenue. But if we're able to better support our US customers through this sort of global infrastructure expansion, as well as, there are sort of companies overseas that obviously would still benefit from our products and services, how do we onboard them efficiently? We're kind of thinking about on sort of a phased approach as a result.
We touched on the fact that you were named president as well now. I'm wondering about your mindset when it comes to sort of these two responsibilities, CFO and being president of the company. One seems to me much broader. I don't know how you, share with us, reflect a little on having those two roles and how you're able to match them.
Yeah, I mean, it definitely creates some challenges at time, because I think, you would say historically there's a benefit of having, as there is often a tension, say, between sales and finance, or marketing and finance, or finance and just general companies, because I think of finance as being a sort of mechanism of helping to drive accountability and ownership throughout the organization as a whole. I think the thing that's interesting about this role specifically within the context of Brex is if you think about who our customer is, our customer are finance professionals. There are people who are working in other CFO roles, other controllership roles, other VP of finance or accounting roles at other organizations. And so there's an interesting dynamic more broadly, irrespective of my role specifically, but just if I think about the broader finance and accounting team at Brex, whereby we actually are an incredibly customer-centric part of the organization, both from a product development standpoint, but also even a sales and marketing perspective, because often when we talk to other companies, those CFOs actually are really interested to talk to the CFOs or finance organizations within our company, because they want to understand how are we using Brex, what is the value we're getting from it, how do we think about the pain points and how our products and services are helping support it. So I think the marrying of sort of the finance team and the broader company through sort of, I guess, my organization is sort of, working well on that dimension. I think the other component to it is really the president role at Brex is about sort of evolving into help, co-run the company with Pedro, our CEO and founder. Pedro is an amazingly gifted product visionary, and I think has an incredibly strong pulse on what should be the product strategy of the company. How should we be thinking about the integration of AI? How do we think about Brex over the next 3, 5, 10 years? And really what my role is internally is making sure okay, we have that strategy, we have that vision. How do we go now and execute against it, and making sure that, we have all of the, different parts of the company lined up so that we can execute and achieve the vision we're kind of set out to achieve.
Want to just quickly touch on capital allocation with you, and wondering what the trade-offs are when we think of marketing versus operations versus R&D. What is it that you're wrestling with? What's the challenge here?
Yeah, I think the challenge is on a few dimensions. I would say when I think about R&D investment, I would say that there's a dynamic around, there's obviously, this upswing in sort of product capabilities and development capabilities through the advent of AI. And I think we're trying to be thoughtful around what is the level of investment we want to make into innovative and agentic workflows that maybe we don't necessarily today have as much sort of maturity and visibility into, say, our card or banking product and their existence that has been around for 6, 7, 8 years. So I think that there's a bit of a capital allocation there sort of conversation that is being had around, whilst we are sort of all in on AI as we think about the fact that we want to ensure that it's embedded throughout the company, both in terms of how we operate, in terms of how we as an employee base operate and how it shows up for our customers. There is a question mark of we do also still have a multi-$100 million business that we need to run and we need to continue to serve our customers on. So how to think about the trade-offs that exist there. I think in terms of operations and sales and marketing, I think a lot of how we're thinking about Brex and its ability to scale in the future will be really contingent on our ability to automate a lot of the operational work that needs to go on for a fintech such as Brex in terms of know your customer, credit underwriting, fraud, etc., through things like AI to ensure that we can continue to sort of scale and serve every company essentially that needs a spend management or corporate card solution. Because, otherwise we may be sort of boxing ourselves out of certain elements of the market that may otherwise be deemed kind of quote unquote too small to have humans in the loop to ensure that they're set up for success. And then on the sales and marketing side, I think this is actually probably the area that we're probably going to have the greatest amount of incremental investment. And I think when we think about the trade-offs that exist there, I think it's largely about how quickly as an organization do we want to grow relative to how sort of profitable as an organization we want to grow. Because, at the end of the day, we're operating in a multi-trillion-dollar market. And so, we definitely don't have any near-term TAM constraints, given we're essentially like 1% of the market, 7+ years in. That being said, there is a way we want to run the company, which is really, as I said earlier, thinking about capital as finite and wanting to make sure that our investments in sales and marketing are self-sustaining and we're not having to raise additional, venture capital just for pursuing market share. We want to ensure that we have a really positive unit economic and feedback loop through the efficiency of our sales and marketing organization.
As you look to build a public company-ready finance function, what tech investments are non-negotiable?
I think a lot of it comes down to two dimensions. One is just like the robustness and sort of strength and stability of your internal controls and your accounting and finance reporting mechanism and muscle. I think obviously, a lot of it comes down to, can you give confidence to the market that all of your numbers are bulletproof, that you have a lot of rigor around how do you define them, how do you measure them, how do you report on them, and that being a very consistent and stable experience for the public markets to go through. And so obviously making sure you have the right internal controls and checks and balances in place, super important. That's definitely a technological investment necessary. Yeah. And then for companies like Brex, where we are predominantly a consumption-based, usage-based organization, there is a healthy amount of investment that we need to make in terms of our data science organization to ensure that I, as a CFO, can get up in front of the market and say, within 12+ months, this will be our growth, this will be our revenue, this will be our TPV or other metrics that we may be designed to report on with a pretty high degree of accuracy. I mean, that's obviously easier to do if you're a pure play software business because you have greater line of sight into the revenue as it comes through. Whereas with Brex, whilst we have software aspects of our business and we obviously have a software product that does generate that type of revenue stream for us, the majority of our revenue is still generated by customers using their corporate cards and spending, or customers using our bank account and holding funds. And that is a harder thing to predict over a longer horizon. So I think part of what we will be doing over the next several years is not only investing in these dimensions, but also just allowing the company more broadly to mature to a size and scale where those things become easier. And what I mean by that is, if you think about Brex and trying to forecast over a long horizon, that is much easier to do when you have almost like the law of large numbers, where you have like a large customer base, large volume base to forecast off, because the observable events are higher. Where it becomes challenging is if you're overweight in any one area of the market or any one area of industry, and suddenly those markets or industries run into economic stresses, then you may find your forecast is meaningfully off. And so I think that's a lot of where I think a certain size and scale of organization will also be necessary for us to be set up for success in the public markets, because we'll want to be able to ensure that we can weather those sort of macroeconomic stresses, whether that is geopolitical uncertainty, whether that is tariffs and the like, without putting the risk our overall financial accuracy in terms of projections.
When AI is being used, perhaps in scenario planning or whatever it might be, some aspect of forecasting, how do you maintain controls and quality over the AI-assisted outputs?
Yeah, it's an interesting question and something we definitely are grappling with at Brex. I think, candidly, from my vantage point, I'm yet to come across an AI tool or product that is able to forecast with a higher degree of accuracy than, candidly, even our finance team is able to forecast with more rudimentary approaches. Where I'm seeing AI be incredibly helpful on is obviously the speed of which you can understand your historical results, the depth of which you can drill into those results and understand, either correlation or causation that may exist over large swaths of data, of which, obviously Brex has a large amount of by virtue of us being our own payments infrastructure platform. That being said, when I think about being able to extrapolate, past 90 days, I think that's where I see the AI sort of degradation of fidelity as it relates to forecasting accuracy, because there are just dynamics that I don't think the models are able to sort of understand and ingest as it relates to, well, what is your actual business strategy? How are you thinking about the ramping of sales reps or the deployment of marketing dollars or especially as you move into new markets and new sort of growth verticals, such as maybe this EU or UK expansion or some of these partnerships that only existed for the last 12 months, an AI model just really would struggle because there's just like not enough historical data in which to rely upon. And when companies are growing as fast as Brex are, adding new products, adding new markets, there's just like a less of a 10 plus year look back that those like AI models can use to then sort of prophesize the future. Whereas I think with just humans in the loop, I think you have a bit more of an intuition around some of these things that will enable you to get a more accurate forecast.
We would anticipate that we would expect that automation within the finance and accounting functions of Brex is you folks are leading the way, but what's the reality? What have you automated? What do you still have to get done?
Yeah, so I mean, I think for our context, we have a roughly 30-person accounting team, and our broader company is 1,200 people. So we're definitely a pretty lean team, especially given we're a fintech player and we operate in multiple products, multiple markets. I think a lot of how we've been able to scale the company more broadly without needing to scale the finance team has been both, candidly, a heavy reliance on Brex. Like we obviously use it internally. We use it for our sort of corporate card and expense management product and platform, which greatly helps our close process. But then I think we've always sort of had this view towards solving our finance needs and gaps through systems and tooling and less so through people. And so I would say a lot of that is reflected into the fact that we have, say, a 5-day close process. Like we have a large organization, despite the fact that we're usage-based, we can close our books in 5 days. And a lot of that is because we've just been incredibly intentional about how do we make sure that at each stage of the sort of close process or the finance process, we have as much automation as we can add, whether it's using our own products and platform as we obviously do, but also thinking about plugging into other tools like Numeric that helps us on the cash flow flux analysis, or it's using other sort of tools and platforms for like our AP automation. And so a lot of that really comes down to trying to hire people ultimately that are really incentivized and really motivated around the notion of automating and sort of up-leveling all of the more rote work, and then trying to focus more on the strategic elements of their job, versus I think if you were hiring someone culturally who's more inclined to sort of have their job, want to do their job the same way kind of day in, day out, like that's probably less the cultural fit for Brex and the finance team more broadly.
Can you talk a little bit, being president and CFO, we get to ask these type of questions. Talk a little bit more about maybe the people challenges that are likely to be encountered as you integrate these new technologies, AI and automation tools, the unique people challenges that every company are going to face. Could you reflect a little?
For sure. I think that, there's going to be, I would say, a schism that is created, I would say, between people who are embracing of AI and thinking about how does this help me do my job better? How does this help me up level? How do I essentially replace all of the things I'm doing with AI so that I can go on to do other things? Essentially being comfortable with the notion of firing themselves from their own job and, expanding their ability to have impact elsewhere. And I think those folks, will definitely be the sort of cultural carriers of companies like Brex, but also just like AI adoption, generally speaking, at companies. Versus, I think if you take a more hesitant or wary approach to AI, or with a greater degree of trepidation, and you have that sort of internal resistance, I think culturally those folk may find it harder to work at companies like Brex because, the train has actually at this point already left the station, and if you're not on it, you really need to rapidly try to catch up to it, versus sort of thinking that way of thinking is probably going to, in the long run, win out. So it is tough, and I would say I also have a great degree of empathy and respect for all of employees, including myself, but more broadly, everyone around. There is this meaningful change that's going on in the market. There's a meaningful change in expectations that is happening at the company level. And that's hard on employees, right? Like you've been hired to do a role in a certain way, and you've been doing that role in a certain way for some time. And now the expectations are shifting on you. And, I got to be respectful of the fact that can be a hard thing for employees to transition through. And so how we think about it at Brex is really around how do you make sure that you give all of the tools and systems and investment to your employee base so that they can make that transition, so they can sort of evolve into this new way of work and set them ultimately up for success, because that's candidly what we want to do, versus like leaving them out in the cold on their own to say like, figure it out. And if you don't, I'm sorry, Brex is not the place for you to work. And so we've been really intentional about being very open with the entire employee base about this is the direction we're going in, these are the expectations we have, but here is also all the support we're going to provide you with to hopefully help you get there. And I think that helps the employees and companies at large hopefully transition through this phase. Because we do think of it as transformational, and for us to think about it as in any other way, we would say we're probably putting our heads in the sand.
Yeah, interesting. Great insight there for us. Thank you. We're up to what we like to refer to as our finance strategic moment. Again, this might have been any time during your finance career, a moment of insight that you experienced and caused you to avoid a risk, pursue an opportunity, whatever it may have been. Anything come to mind when we ask for a finance strategic moment?
Yeah, for me personally, but also for Brex, I'd be remiss not to highlight, how Brex showed up in the wake of the SVB collapse back in 2023. I mean, just to kind of set the context, I was only pretty new to the role. I'd been in the finance seat for 6 months at this point, and that was a pretty remarkable event that hadn't really occurred in some time. And I think from that perspective, it caught a lot of people unawares. And also it was something that I just, upon remembering, was just, it accelerated so rapidly from like the beginning of the week to the end of the week and then the weekend thereafter. And one of the things that I really appreciate about that as a strategic sort of finance moment for Brex was not only was there the dynamic of, okay, well, how is Brex set up to be able to weather this by virtue of like, do we have our capital with the right partners in the right format so that we can continue to serve our customers? But then also given the fact that we are, big proponents of supporting the startup ecosystem, how are our customers potentially impacted if they have funds otherwise, locked up at SVB while they're working through what does this look like from an administration perspective? And so I think, I remember like with some sort of fondness that the company overall, and as a 1,000-person organization, really rallied around, okay, what is the product we can launch to help customers meet payroll next week if their funds are trapped at SVB? And that product didn't exist at Brex or even generally in the market. We had to devise the product, go to lenders, raise $1 billion in capital in terms of commitments so that we could go out and give our sort of customers certainty around being able to be there in the case that they weren't able to get access to their funds from SVB. Ultimately, they didn't need our products because they were able to get access to funds, which was the best outcome for everyone. But what I thought that really highlighted for me as a moment was finance can have this, especially the fintech, but finance can have this outsized impact in terms of thinking through how can you show up for your customers, especially in times of need? What are the capacities that you may have, especially as a larger organization, to get access to capital, thinking through helping your customers when, especially as a smaller company, you may not know sort of what to do or how to approach those type of challenges. And so I was really happy with both how Brex showed up, but also the finance team specifically.
Then we're going to move to our mentoring round. Thank you for that. Great story for us. We're going to move to the mentoring round where we're going to ask you to look back again. And what we're interested in is that first 90 days you stepped into the CFO office. That was back in 2022, so 3 years ago now. Just want to know what were you surprised by? There was something that if you could go back in time and tell yourself, you would. There was something that surprised you, caught you off guard. What comes to mind?
Yeah, I think something that I definitely have experienced over the last 3 years is it's really important for the finance team to make sure that they continue to feel very accountable to and have ownership over the ultimate results of the company. I think there's maybe a tendency for G&A functions, but also finance to sort of feel like they're a step removed from the outcomes of the business, whether that's, and think of it more as, oh, this is a go-to-market thing or this is more of a product thing. And one of the things I've learned over the last 3 years is like, that's kind of a bit of a cop-out. because ultimately as a finance team, you are this central nervous system into the organization as a whole in terms of how do you sort of deploy capital, how do you invest it, and how do you ultimately hold the business accountable to the performance. And so I think really feeling that sense of ownership and accountability to the overall performances, that if you miss numbers, it's not necessarily the CRO, or it's not necessarily the CMO, or it's not, if you miss a deployment cycle, necessarily the CTO in isolation. It's really about how do you as a finance organization show up and really sort of make sure that you are being those thoughtful and collaborative partners with the business to ultimately set up for success, because that's what you want to ultimately achieve. So it's really just that like finance isn't on the sidelines, and it really does own the success of the business as a whole. I do think that one of the pieces of advice that I did get way back when I, looking even further back in terms of my early career at Goldman, was another piece was a Goldman MD sort of took me aside one day when we're talking about a pitch for a client, and his big emphasis to me was, what is the story we're trying to tell with these numbers? Like, what is the narrative that we are trying to communicate to the client or to the client's board or whomever? And I think that's the other thing that I've really learned over these last 3 years has been, even prior, which is, yes, you can as a finance organization report on the numbers and provide data out to the executive team or the board or whomever as to relates to the overall success of the business. But I think it's really important that you don't miss that second step of, well, what is the story you're trying to tell, and what is the narrative you're trying to explain to bring those numbers and performance to life, whether it be for the board, your executive team, the company at large, investors, PR, whomever, and making sure you tailor your approach to the audience, because you have to recognize that people have different sort of priorities, people have different things they care about, and people also have their different degrees of understanding of the business, and you need to make sure you flex the narrative to adjust for those audiences.
Yeah. Well, thank you for that. We always like to ask our guests to reflect a little on the personal side, Ben. Wondering, is there something after 7 years, I doubt it, but something your colleagues might not know about you, something most people might not know about you? Of course, you did grow up, I think, on the other side of the world, so maybe there's a lot we don't know about you. What would you tell us? Something most people might not know about Ben Gammell?
I think genuinely, and the executive team knows this because I'm pretty open and candid with them. I think something that people may not know about me is that I actually feel like I suffer from a pretty high degree of imposter syndrome. Yeah. I think that, by virtue of my career, part of it has just been, being afforded the opportunity to step into larger and larger roles in a relatively accelerated fashion has made me feel at each of those junctures that I'm woefully underqualified for the role that I inhabit. And, it does create a degree of stress in how I think about my approach to work and making sure that I set up the company and our customers and everyone for success. And I think that that's maybe just something that's like not necessarily as apparent externally. And even within the company, I don't necessarily talk about it that much with the Brex employee base, but I do think there's something to be said for trying to find ways of continuing to push yourself. And I will say, for what it's worth, the things that I worry about and think I'm underqualified for today are different than the things that I thought I was underqualified for several years ago. And so I guess the only solace I can take is I actually now feel like I'm more qualified for the things that I didn't feel like I was so qualified for several years ago. And so in the fullness of time, I should get there, but it definitely is a thing that sort of hangs over me a little bit.
Yeah. Well, great way of looking at it. We always like to ask if you have a book recommendation or a resource, something that's influenced your thinking, or maybe it's something you've escaped with. We're easy. What would anything come to mind?
Yeah, I think something that comes to mind, and for what it's worth, I'm not a big reader, controversially maybe, of finance books, generally speaking. And so maybe a book that I will recommend is a book by Peter Attia called Outlive. And it really goes over how to think about setting up the right rituals and behaviors to live a long and healthy life. I would say, there's a dynamic that I very much recognize, which is careers are long. It really is a marathon, not a sprint. I've been at Brex for 7.5 years, which, given the company's only been around for 8 years, is a relatively long period of time. But one of the things I really want to try and focus on is okay, well, how do I make sure I'm setting myself and hopefully the company up for success over the next 7, 14, 21 years? And I think to do so, I need to make sure that I take care of myself outside of the workplace as well as inside. And so I think that book was just a healthy reminder that, your health is ultimately what you have and you should probably take care of it.
Oh, great selection. We haven't had it. We're always happy to get a new one. Ben, we're going to ask you to finally just to look forward, and we're interested in your CFO priorities for the coming 12 months. What would those be?
I think a lot of it is around, as a company becoming IPO ready. I think there's a lot to be done in terms of thinking through what does readiness look like for us, to your earlier question about what are the processes, systems, and investments we need to make to be a public operating company one day, and what sequencing and schedule to think about that over the next 12 plus months. So it's definitely something that's top of mind and something that, we'll be definitely focusing on in the remainder of this year.
Ben Gammell, thank you for joining us on CFO Thought Leader.
Thanks so much for having me. It's been a pleasure.